Welcome to welcome to the B.F. Anderson Techno Fundamental Report for June 22nd. Gerald Loeb, great book, Battle for Investment Survival. He has a section of the book where he talks a great deal about speculation. Remember, the root word for speculation is the Greek word spec, which is also the same word used for spectacles. So why would you wear spectacles? Because you want to see. So a lot of people feel that speculation is a form of gambling. What it really is where you're trying to see the future. You're trying to see what's coming down the road so that you can get in front of the crowd and invest ahead of the crowd. One of the things that Loeb talks a great deal about is the oversimplification of investing, where people want to avoid speculation, whereas really what he says here, he says, my feeling is that an intelligent program aimed at doubling one's money might at least succeed in retaining one's capital or actually making a good profit with it. So basically, basically we're all looking for simple answers. You know, as you can see in this cartoon, simple but wrong, complex but right. But the simple answer is, well, we should avoid speculation and we should do like a buy and hold, or, you know, I can remember back in 2008 during the financial crisis, that's where a lot of Ponzi scheme, well, the Stanford Group Ponzi scheme, people were saying, well, I could just go put my money in a CD in a bank in Antigua, which just didn't make any sense. You know, Bernie Madoff offered a very simple answer. He went for 35 years where his portfolio went up 1% per month, or it was flat, but it never had a down month or a down quarter or a down year. So, you know, people were looking for the simple answers. Now, there's a saying on Wall Street that the market goes down like an elevator, and then it goes up like an escalator. So we do believe that we've seen tremendous improvement in the markets. However, it's not going to go straight up. There's going to be wigs and wags and wiggles and shake and bake is what we call it. So the way to get through a bear market is you got to make hay while the sun shines, because when you're in the bull market, you need to make as much money as you possibly can for your portfolio so that when the inevitable bear market comes along, you have a built-up cushion. Now, I wanted to point out two indicators here. This is the NASDAQ. This is a 35-week moving average, and you can see that 35-week moving average is, you know, decisively turned up. The rule is, and each dot represents a week. And so the rule is that when you get 2 weeks above the 35-week moving average on both indexes, meaning the S&P as well, that is a reversal of trend, and the trend is turned up. So we do believe the trend is turned up, and we also believe that the bottom is in. Now, this is an interesting indicator. This is a new one. I'm studying it. I just learned about it recently. It's called the Chande Trend Meter. Now, it was developed in order to determine whether you're in an uptrend or a downtrend. And you assign a very simple number to determine that. It's a very simple calculation, but the formula is complicated, actually. But what I wanted to show was, using the Chande Trend Meter, you can see here back in the financial crisis back in '08, we got down into the red. Okay, pink. So that would be strong downtrend. Then we reversed up and we got to green. The low for the market was in. Here we have 2016. We touched the pink. We get to the green. The low in the market is in. Here we have the COVID bear market. We got into the pink. Once we got to the green, the low was in. So here we are today. We got down to the pink. We've now moved into the green. So the question is the low in? Could be. More than likely it is, but we'll have to see. Now, just to kind of make a point about this Chande Trend Meter, I went ahead and took a look at the price of oil. You know, oil got really hot there during the bear market of 22, but now it's down to a reading of 30. Well, actually 32.67. So oil is in a strong downtrend. Just a way to use the indicators, just an observation. So as we worry about inflation and so forth, the price of oil is not indicating that. Now, what is concerning me right now, the biggest concerns I have is that interest rates tend to be, are kind of creeping back up again. We really don't want to see the 10-year Treasury back above, say, 4.25. You can see that the power index has actually turned back above 0. So I am concerned about the fact that interest rates are creeping back up again. However, if we look at the 200-day moving average on the S&P, you can see the S&P is in an uptrend. You can see the NASDAQ is in an uptrend. So really what I'm saying is whether you choose to speculate or not, conditions are becoming more favorable. But all I can say is I can only talk about what I see. I can't say that I'm going to predict anything. I'm just telling you right now, today, these markets have turned into an uptrend. Now here's the aggression index. Now as you can see here, let's go back and look at this low. You know, we rallied up tremendously. We did have pullbacks. We had pullbacks. We had pullbacks. This is the escalator. This is the elevator. And so you can see here that the aggression index, which is a very good indicator, has gotten above its moving averages. The moving averages have turned up. We had a little bit of a pullback in here in the last day or two. That's to be expected. Now on new lows for the New York Stock Exchange, we're really seeing an improvement there. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days below 40 new lows a day. So we're seeing improvement in this indicator as well. Now, again, you can see here, this is the Renaissance IPO Fund, which is a speculative, it's a IPO fund of IPOs that have gone public in the last 2 years. So it's a very growthy ETF. But as you can see here, we're getting somewhat of a pullback. So this is to be expected. We are going to have pullbacks along the way. So here's the S&P new highs. We actually got a spike up to 60 last week, but then we pulled right back again. So we're still not seeing the number of new highs consistently staying above 60. That would be a very positive sign. Volatility index, I just had to point this out. This is the VIX. You can see it's hitting, you know, lows that it hasn't seen in years. I mean, we're down to a reading of 13.2. This is basically saying this is what they call the fear index. So the market is actually discounting greed is what it's discounting. So let's take a look at a stock. And again, I have the trend meter up here just to make the point. This is Intuitive Surgical. This is a medical company. They make the Da Vinci robot, which is robotic surgery. You can see here we're well into the green on the trend strength. You got a major buy signal right here with this spike in volume. Actually, the initial buy signal came back here. You would want to take an initial position here, and then you would add to your position here. So it jumped, it's consolidating, slight pullback, consolidating, but still remains in an uptrend. So let's just take a look at the numbers on this company. This company is pretty profitable. Their operating margin and profit margin over 20%. That's really, really good. Return on equity 11%. That's fine. First thing I look at when I look at a company is the cash flow. We have positive cash flow even after debt payments. And then we got about $2 billion in positive cash flow from operations. They have about almost $5 billion in cash. They don't have any debt. Current ratio 5 to 1, which is excellent. So anyway, quarterly revenues were up 14%. Earnings, however, pulled back about 3%. And this is the most recent quarter. So pretty solid looking company to me. I think I would pay attention. It's one to keep an eye on. So if you have any questions, please let me know.